Good evening and welcome to the Australian Plus's special discussion on the 2024 federal budget. I'm Claire Harvey, I'm the Australian's editorial director and I'm host of our daily news podcast, The Front. I'm joined here at the Australian in our studio by Ross Greenwood from Sky News Australia, the Australian's contributing economics editor Judith Sloan, and Sky News Australia's Edward Boyd, economic analysts right here in the studio. And in Canberra we have our chief political correspondent Geoff Chambers, who will bring us the political analysis of Jim Chalmers' third federal budget. I'm going to start with the issue that everybody's talking about today, the $300 energy bill relief that we'll all be getting, and we really will all be getting it because it's not going to be means tested. The discussion today has been about the idea in the federal budget, this is Jim Chalmers' idea, that even though the government is pushing out a vast amount of money, this will not be a sugar hit for the economy. It will not be inflationary. Ross, you are an expert at explaining complex ideas quickly.
Thanks.
Famous for your money minutes. Tell me the logic here, and this is Jim Chalmers' logic, not yours.
This is Jim Chalmers' logic. So, because energy is in the CPI basket, in the inflation basket, effectively what happens is if you cut the price of that energy, so remember that this is not money coming to you, this is money going straight off your bill. Effectively, you reduce the price of energy in the energy basket. And so by doing that, you take away one aspect of inflation over energy. Now, you could do the same thing for childcare. The coalition government did the same thing, actually sent inflation negative when they had free childcare for a short period of time. The problem is, when you stop that subsidy, the inflation comes roaring back. So the idea here is that the government is trying to bring inflation down to give it back to the Reserve Bank, to put pressure on the Reserve Bank saying, over to you, what are you going to do about this?
So essentially the government is handing taxpayers' money to the energy companies.
Yes.
Is it coming through me? Am I ever seeing this?
No,
am I aware of this?
You will be aware of it because you will see your bill will be less. So it'll be $75 less over 4 quarters. So it's actually on a quarterly basis, but you don't get the money. It's actually going straight to the energy companies, straight off your bill. And that's the reason why it's not inflationary.
Now, Judith, the economist in the room, one of the economists in the room, how have economists responded to that idea? Does it stack up? Is it inflationary?
Well, I guess the first thing an economist would say is that these cost of living measures can obviously be justified on what we call equity grounds. So, we worry about cost of living pressures, particularly people in straitened circumstances, low income earners and the like. And the rent assistance is another example of that. But what we would say, and I mean, bear in mind that economics is a dismal science, is that these kind of cost of living measures are stimulatory. They're stimuluses. So by relieving people of their $75 a quarter in this bill gives them $75 to spend elsewhere. So it therefore is expansionary in that sense. And it's interesting because in this budget, there seems to be a high degree of unanimity amongst economists about this aspect of the whole strategy compared with other years where there's been more of a divergence of opinion. So, I mean, it is also the issue is the size of the stimulus. So this is $3.5 billion that the Commonwealth is devoting to that, and then I think it's, about 1.9 or something to rental assistance. Yeah. So it all begins to add up. And another point, Claire, we mentioned earlier in our discussion is that, of course, the state governments are in on this act too. So the Queensland government's announced a very substantial electricity rebate.
It's $1,000.
Yeah.
Yeah, so it's big.
So, from the economy doesn't, it's kind of impersonal in that sense. It just sees this big injection of funds into the economy, and that's potentially inflationary. Now, the Treasurer's response is that, well, Treasury says it's not inflationary, but, it's just an assertion at this point. He's not really backing up that argument.
Also, it's really about, Edward Boyd, what the Reserve Bank thinks is inflationary, isn't it? It's not really relevant, is it, what Treasury thinks?
Absolutely. Look, extra spending in the economy. When people get extra money, what do they do with it? They spend it. If you're getting $75 extra per quarter, you're going to have free cash you're going to spend that money in the economy. We actually saw just an example today on the stock market. Retail stocks all lifted on the positivity from this announcement because their investors are now expecting more money will be spent in retail, just as an example. So obviously this is something that the Reserve Bank watches very closely. Their board meeting was only 1 week before the federal budget with all of their detailed forecasts, and there's quite a divergence between where RBA sees inflation finishing this year and where the Treasury sees inflation as well.
Geoff Chambers, I'll bring you in now. Jim Chalmers was very confident in walking around the press gallery yesterday and giving his press conference. He was wearing socks that declared him the galaxy's greatest dad. He seemed in a fantastic mood and very confident. And yet today's conversation has been the conversation we've just had. Is this all spin, basically? Is he spinning something that he's actually going to put all our mortgage rates up? What's your view of the politics of this budget and how it's played out over the day today?
Well, I think we should cast our minds back to their first budget, which was October 2022. After almost 10 years of coalition rule, that budget was fairly easy. I mean, they came in, they found that they cut a lot of the coalition-era programs. They said it was all the coalition's fault, and they were at the same time benefiting from this huge post-pandemic boom in terms of migration, the labour market, booming commodity prices, given what was going on around the world. So, it's been put, and I don't know how much Jim Chalmers liked this, but he's one of the luckiest treasurers that's ever walked into the job. We moved to the second budget last year. And at that point, they're betting down some of their big off-budget funds, talking up the NRFs, the HAFs, while at the same time having trouble getting that through the Parliament. I think with this third budget, we've got an election scheduled 12 months away. This is when the pressures really come down on the Treasurer. And I think that the reaction today and immediately last night is probably one of the toughest reactions to a budget since Joe Hockey's budget, infamous budget. And I think what that could be put down to is in the lead up to this budget, you could really clearly see there was confusion about the narrative. We were hearing about future made in Australia. We were hearing about housing. And then they came back, obviously, to think, cost of living. We've got an election. The RBA saying what they did. So there was a lot of last-minute manoeuvring and changes that were going on. And just a bit of insight, a Cabinet Minister said to me last week that the Future Made in Australia Fund was effectively created because the NRFs and the HAFs and the Rewiring the Nations, they were taking so long to stand up, they haven't got money out the door, and the government desperately needed a marketing ploy to sell. So you can see that the focus groups would have kicked into gear, and any polling that I've seen on Future Made in Australia, it obviously, if any punter is asked, do you like a Future Made in Australia, everyone will go, of course, that sounds really, really good. But then you drill down to the substance of it, which is what we're going to do tonight. Now, just another thing is obviously really interesting to watch the dynamics between Jim Chalmers and Anthony Albanese. Anthony Albanese and Jim Chalmers both launched media blitzes this morning trying to sell this budget, and just immediately came under just immense pressure. So I think the difference between the two is that Jim Chalmers is showing great discipline, sticking to his message. Whether you agree with the message or not, he's not deviating from it. But then you had Anthony Albanese this morning talking about August elections, December elections. We're going to have a budget in March. So there's just a bit of confusion, and it's interesting to contrast the two top guys in Labor now getting out there and trying to sell a budget that has not been well received.
You mentioned Joe Hockey's infamous budget, Geoff. Of course, that was the budget that was famously austere, where Joe Hockey and Matthias Cormann were photographed smoking cigars in the beautiful gardens of Parliament House. Yeah, it was seen as 2014. It was seen as a killer budget by people who were out of touch. Does the response to today's budget, is that about Jim Chalmers, do you think, being out of touch or being sneaky?
No, I think there's a little bit of sneakiness about this, because what they've done with the inflation and the way in which they've tried to say it's going to bring inflation down is one thing. But there's a political reality in this as well, and that is before the last election, remember that it was Anthony Albanese who said this government, my government, will bring down your energy prices by $275. Now, the political advertisement is pretty obvious for all to see. And that is, this government did not bring down your energy bills by $275. It raised your energy bills by this much. And so as a result, guess what? We're suddenly going to get $300 off our energy bills. So it takes away a political advertisement ahead of the next election. So when you heard Anthony Albanese today several times say, this is not about the politics. This is all about the economy and trying to get the settings right. Well, that was completely not right, because it was all about the politics. It was all about the optics of making certain he was going to hit an election, taking away as many of the pressure points that the coalition could mount upon him, including being a government that could produce a surplus. Because previously the advertisements have always said that the Labor Party would never produce a surplus. Well, now they've produced two. And so they've taken away this notion of the coalition being the natural economic managers away. But then they've now got to justify that by the spending and the debts that will mount over the next 10 years.
Because, Judith, they've also created a lot of deficits, haven't they?
Yes,
in the out years.
Well, I was, I think this is a good punchline, because in 2012, Wayne Swan, then Treasurer, stood up and said, today I announce 4 surpluses, whereas actually what Jim was doing today, I stand up and announce 4 deficits, $122 billion in total. The thing that amazed me is that there didn't seem to be any shame in him saying that. He didn't seem to be worried by the fact that each year payments were in excess of receipts, quite substantially, So I'm kind of not sure I quite agree with you, Ross, that they seem to be throwing away the sort of credentials of good economic managers by saying, yes, we've brought down 2 surpluses, but by the way, we've got 10 deficits coming up.
You wrote in your column this morning in The Australian, Judith, that there seem to be no fiscal rules.
Yep.
What does that mean?
So up until Chalmers, every other treasurer has run with a series of fiscal rules with numbers. So they have things, for example, that real government spending will not exceed 2% a year, debts will not cover more than a certain proportion of GDP and the like. So they're sort of hard and rules that are bound. Even Wayne Swan had them, he didn't necessarily meet them. But there, I think, and I'd be interested in my fellow panellists' view on this. I think these are important guardrails, whereas, there is sort of a set of platitudes put down by Jim Chambers, including that we want spending to be quality and sustainable. And I think, well, really, So I think that's a real weakness of this budget, actually.
Unavoidable spending, Geoff, was the phrase I was hearing last night. That's a new one for Jim Chambers, isn't it? He's come up with that for this budget. What is unavoidable spending?
Yeah. We talk about spend. I wrote a splash on Budget Day saying that clearly you can either choose to spend or choose not to spend. That is your choice as a government. And one other element of his spin is about terminating coalition programs, how they just dump pretty much all the blame on the coalition. Let's be real, these are 5 and 10 year funding deals that don't last forever with states and territories. Now, what you can do is apply a bit of rigour to that, particularly thinking that Queensland and WA are benefiting greatly from coal and iron ore and reporting big surpluses. But no, whether it's the GST top-ups or health or any of these funding agreements, they are increasing them dramatically. And when he talks about terminating programs, he's talking about Commonwealth funds for essential services. I just want to talk about as well these huge funding surges, which a lot of that happens in this election zone over this 2-year period. Yep. That second year in particular is a lot of spending. You've got to remember, Labor has made a lot of promises. They've made promises around climate change, emissions reduction, the housing target, 1.2 million new homes by 2029. They almost, to deliver or come close to delivering, and on current trajectory they are not going to meet them, they've just gone all in. They've decided this is what we promised, this is what we stood for, and now they're using the budget to get the money out the door. but it doesn't mean that the money's real money. There's a lot of equity, there's a lot of loans, there's a lot of opaque, off-budget, use. So it's really hard to get a picture on things when they're announcing $1 billion here or there. Is it real money? What's it attached to? What's it tied to? So a lot of smoke and mirrors going on.
There's also going to need to be legislation to get this through the Parliament, and that, of course, means that we need to be interested in what the other parties are saying about this budget. Future Made in Australia, for example, needs 2 pieces of legislation to become into reality. Ed, what are you hearing today in terms of the reaction? I'm particularly interested in the Coalition, the Greens and the small business sector.
Well, the Coalition, let's start with them. Angus Taylor's called the budget a cost of living con job, says it's big on spending, as we were just saying, big on tax as well. This is one of the biggest taxing budgets we've seen in more than about 20 years. He said the budget should have tried harder to address inflation and cost of living. It should have done more for the small business sector, because there's not a lot in the budget for small business. There is the $20,000 asset write-off extension, but you need to be making a profit to actually bank that. So not much for small business.
I think it's actually right now, just on that, I think that it's something like 42% of small businesses are not profitable right now. I think that's as bad as it is, so you're right about that.
Yeah, you've got to make a profit to get that. Also, Angus Taylor says missed opportunity on fiscal discipline, as you were alluding to a minute ago. Spending should have been much more restrained. But he did say that they do support the $300 energy subsidy, but it should have been means tested, because there's a lot of wealthy people there that don't need it. Moving on to the Greens, a pretty important part of the crossbench, they were not happy at all. They said the government is rewarding the bad guys, which is the resources sector and the landlords. The Greens claim right now that mining companies will receive about $50 billion over the forward estimates in subsidies. Property investors and landlords, they say, will get about $175 billion in tax breaks. Greens were also not happy with there being a surplus of $9.3 billion. They think that money should have been spent on more in the housing sector to help people either get into a home, or more on rent freezes as well, which is another policy they've been going pretty hard on. They're also not happy with the stage 3 tax cuts.
Are they happy with anything?
That's right.
They're happy with the deficits, I presume.
I guess so.
But yeah, the rent assistance that you mentioned before, that was increased by 10%. Commonwealth rent assistance, that's about $25 extra a fortnight to people that get that. The Greens say this isn't enough, even though it helps 1 million people. So that's the Greens and the Coalition. Then we've sort of talked about the small business sector, how 43% of small businesses roughly are not profitable. So they're not going to be able to get that instant asset write-off. There were some other things there for small business. For example, the extension on apprenticeship rebates. So this is to help more people come into the workforce, more for construction to get to that housing target that Geoff was talking about. So if you have an apprentice, you'll now get up to $5,000 to help subsidise the cost of employing an apprentice. But that's basically it for small business. And then going to the top end of town, there's not a lot in there for big business, apart from if you're a green energy company looking to produce green energy.
Or Twiggy Forest.
If you're Twiggy Forest, you'll get something. If you mine any of those 31 critical minerals, you're going to get, obviously, tax subsidies over the next few years.
And you know who one of the biggest beneficiaries of that will be, Ed? Will be Wesfarmers. Because, of course, it's got its lithium processing plant, which it's actually undertaking in Kwinana now. So when they start to get those production offsets, 10% of the production, they'll get the tax benefits on. That's Wesfarmers, right? But there's also Chinese companies here in Australia doing the same thing. And so are they going to get the benefits? That's going to be fascinating just to see how the government reacts to that.
Well, let's talk about the Future Made in Australia detail that we saw yesterday in the budget for the first time, really. Future Made in Australia, of course, has been an idea that the government had introduced before the budget, but we didn't really know what the detail was going to be. There were some small rats and mice announcements that they'd announced. Now we know it's over $22 billion. But, Geoff, Ross, you were explaining to me before that that money's not going to actually hit the budget. Why not?
No, and the reason for it, I actually tackled the Treasurer on this yesterday when he walked through the press gallery and through the Sky News offices, and I said to him basically, the Future Made in Australia Fund, I said, is this on the balance sheet or off the balance sheet? And he said, oh, it's both. So in other words, some of it does hit the balance sheet. But the reality is, if there's a tax credit on the first $2 per kilogram that you produce of green hydrogen, well, you've actually got to produce green hydrogen before the government has to pay that tax incentive or forgoes that tax to that company. Now, no green hydrogen has ever been produced in Australia, not to this point. Now, there are projects up in parts of regional Western Australia in particular, and so eventually it might come. Twiggy Forrest, Andrew Forrest has got ambitious plans, certainly in Wollongong and in other parts of Australia, but the reality is that right now, if you produce green hydrogen, it's uneconomic. You are far better off to use gas and to actually turn that into ammonia and then hydrogen to make it profitable and to make it work. And that's how, if there is hydrogen in Australia, and there is, that's how it's produced. So until you get enough solar energy to make that viable, guess what? It's going to continue to be made by gas, and the government will not have to pay those subsidies simply because nobody's making it.
The critical minerals industry in Australia, Judith, says it's becoming more and more uneconomic. They just can't cope with the wave of imports they're getting from places like Indonesia, backed by Chinese money. Another way to handle this would have been for the government to subsidise it, to make it economic for them to produce things like green hydrogen, you know, to meet their goal of net zero. You wouldn't have liked that, but would that have been a better way to do it?
Look, I think there's a big distinction between, you know, green hydrogen, green steel, and on that. I think the opposition is right to object to that. When it comes to the critical minerals, I think it's a little more nuanced, because I do think there are national security implications. I mean, basically, you know, 95% of critical minerals in the world, processed critical minerals, are controlled by the Chinese. And I think if you go and talk to military people and the like, they'd say this is a tremendous vulnerability. So I think the opposition is holding fire with the critical minerals story. But can I make a broader point, Claire, which is important, I think, for our viewers too, that I think the government's got into the habit of saying that a policy is an announcement. But an announcement is an announcement. You know, and I mean, you see that, you know, Geoff mentioned that with the housing target. You know, we're going to build 1.2 million homes in 5 years. Well, that's great, but are they? You know, and I think, you know, the proof of the pudding is going to be in the eating. And they're just not going to make these targets. And the final point is that, and I'd like the view of my fellow panellists, and Geoff mentioned the sort of retail politics of the future made in Australia. I think at a high level, it's quite Trumpian, isn't it? Made in Australia. And then when you start talking about critical minerals and green energy and green hydrogen and stuff, you kind of, you know, the interest wanes. And they're hearing about Qenos, which is, you know, the big, you know, plastics maker. We all, if you live in Melbourne and live in Sydney, down at Botany Bay, down at Altona, we know those petrochemical plants gone.
So there is your future made in Australia. Why, if a government is going to subsidise all of these new things,
and
do you allow Qenos, which is strategically important for Australia in a very fragile world? The one thing you need to be able to make is your own plastic pipes. And they use gas as a feedstock. They don't burn it, they actually use it to make the pipes. So there's a point where you can use your gas, your strategic advantage, to make the things that you fundamentally need. But the government has not said boo about this company just basically being wrapped up by its Chinese owners and sold to property developers and closed. I mean, it's nuts. So there is a future made in Australia policy that should have been front and foremost in the government's mind and was not. But, you know, there's a lot of other businesses such as that that are right now saying, what about us? You know, Orica is a classic example. The big fertiliser, explosives, ammonia, which depends on gas. They're investing massive amounts of money at the moment in the United States. I think their boss, Sanjeev Gandhi, last week said he wouldn't invest another dollar in Australia because he was far better off putting that money into the United States, where he gets cheaper gas prices and gets more subsidy from the government there. So this is what the government is up against. It's about the competitiveness of the existing businesses, while you're also trying to give some encouragement for the future ones.
Something the government talks about, Ed, but doesn't seem to have talked about in the budget is productivity. We've got some great questions from our audience. One of them is, what are the genuine productivity levers in the budget?
Well, one of the big business criticisms of the budget was there wasn't really anything in there mentioning productivity or addressing the problem of productivity in Australia. Productivity growth of the last couple of years has been particularly weak. It's measured as GDP per hours worked. The last couple of quarters, it has started to get a little bit better and picked up slightly, but it's still at I think, near 20-year lows in Australia. So that the budget didn't really have any levers that they could pull to fix productivity and the productivity challenge. But you ask, the Governor of the Reserve Bank gets asked regularly, how do we fix productivity in Australia? And it's a very difficult question for her to answer. It's a challenging thing to tackle. How do you actually do it?
Because it's not the Reserve Bank that actually controls productivity, it's government policy that controls productivity. And so if the government's not prepared to make the hard decisions to try and improve productivity, which is tax reform, which is labour reform, all these types of things, then under those circumstances it does go backwards, and so does economic growth. And that's part of the fundamental problem of this budget. Economic growth is weak and the spending is growing much faster than what the economy is growing.
And sort of the important link there is to business investment. And Australia is an attractive destination for investment, which, we said is, I think, pretty weak in certain areas. Now, you see, Jim, the Treasurer, talks about the care economy. Well, I'm thinking, okay, what, the care economy? Look, again, one undertakes these things for very genuine, equitable reasons, but I don't know whether I call it the care economy. These are basically open-ended programs, spending programs, right? There's not much concern about the efficiency with which the money is spent. And, one could argue that, for example, the huge increase in the costs of the NDIS, that's one of the things that is undermining productivity, because so many of the resources are going to that activity at the expense of what would otherwise be more productive activities.
So here's a little stat for you from it. The budget shows that the NDIS in this next financial year is due to rise by 48.8 billion, then 52.3 billion, then 56.5 billion, then $60.7 billion. Now that's money just gone. So the fact of the matter is it's rising, 8% compound. So that's growing much faster than the economy, much faster than inflation. And the only thing that's growing bigger than that is the government's debt and the interest on that debt. So there's the two key things that you've got. So the government's borrowing to fund the NDIS, putting us into more debt, which it's having to pay more interest on. So that's the circular nature of this.
In federal budgets for probably 4 or 5 years now, Geoff, we've been talking about the NDIS spending in the out years and how it's a problem that governments in future are going to have to deal with. The government has started trying to deal with it. What's happening to that process of imposing some discipline on the NDIS?
Well, I've written a few stories for The Australian with my colleague Michael McKenna, and we've tried to FOI about 5 different ways the initial Treasury modelling and the briefing reports that were prepared for Jim Chambers for both National Cabinet and Federal Cabinet. Always been blocked for a variety of reasons which are ridiculous. And we still, to this day, all we have is a 5-point plan from Bill Shorten. They're going to increase compliance, streamline applications. When you look at the budget and what it's predicated on, I mean, with all the extra spending and then them suggesting that, $14+ billion will be saved, but just trust us, it'll all be fine in terms of, the growth halving, basically. It raises huge questions about the structure and the future of the budget. In December, there was a National Cabinet meeting where Anthony Albanese agreed to huge multi-billion-dollar deals to get the states to do what was right and what they should do, which is be more efficient in the way that they fund the NDIS. But he had to basically spend tens of billions to get them to commit to extra funding. So there's a lot of creative accounting going on and a lot of questions that haven't been answered.
Judith, something that's happened in this year's budget is that the future funds results have been included. Another question from our audience, what does that mean and why has it not been done before?
So it's worth going back through the history. So as people will remember, it was created by Peter Costello to kind of hive off the, particularly the receipts, I think, from the final tranche of the Telstra sale. And it was a really good idea. It was it was hypothecated to fund what were inevitable liabilities for superannuation for public servants and the military. And the deal was always that initially the future fund would retain the dividends It's been a huge success, by the way, and you know, hats off to Peter Costello there. He did a great job because he, of course, subsequently became the chairman for a decade. But I think it was from 2021 that it had been agreed that the dividends would flow to effectively the government's P&L. So they are now in the statement where we see receipts, payments. There's then the dividends from the future fund. So it's helping with the cash balance that is observed, and I think it's fair enough. I think there comes a time when you've got a fund and it's for a purpose, and I think it's total. I mean, they're not using the capital from the future fund, but I think it's perfectly, I don't know whether you agree, Ross, but I think it's perfectly fair that they should use the
I'm just having a small smile to myself when you say that, Judith, because I'm thinking that probably the money that's coming in from the future fund, the dividend, is making up for the loss of money that they're getting from the Reserve Bank. They used to get $5 billion a year from the Reserve Bank, but because the Reserve Bank during COVID went and bought all those bonds that arguably they didn't need to, and they were underwater on those, the Reserve Bank now doesn't pay the government a dividend at all.
Completely trashed its balance sheet.
That's it.
So,
and does the future fund now cover that super liability? Has it grown to be at the right level?
Well, I think not. No, but it's all a help. And look, I'm quite a believer in the future fund. I mean, like, the money would have been otherwise spent, and we've got a very substantial amount of money. It's well over 200 billion. And I think it's given us quite a lot of cred in international financial circles. And so I think it actually had a sort of positive spin-off, and we're not necessarily seen as the Hicks from down under.
Well, that's an interesting observation, though. Go the contrast of when a government was in very strong surplus through the sales of public assets at that time, as compared with today, when you've had an enormous sort of boost to our government revenues, right, in this time. But then, what do we have to show for it? Yes, there's been funding to ARENA, the organisation that basically funds a lot of these new renewable energy programs. Then also to the Clean Energy Finance Corporation itself. But really, there's no legacy of the surpluses that we have had, and that's a shame in many ways that we don't have another pot of money sitting there for the future, such as the future fund. That would have been really, if you like, a highlight of this government, and would have been a highlight of this period of prosperity for Australia.
Ed, we heard you talking earlier before about what Adam Band had said this morning, that the government was rewarding the bad guys. That was, as he said, wealthy landlords who own 5 or 6 properties, or I think it might be all landlords, and the fossil fuel industry. One of our questioners has asked, why didn't Labor provide petrol, diesel or gas bill relief? I think I'm interested in your answer to that, and the bigger question of, is this actually a budget for the fossil fuel industry, and if so, in what way?
Look, I don't think it's a budget for the fossil fuel industry, but they definitely decided to not provide any more of that fuel excise relief that has happened over the past, about a year or 2 years ago under the Morrison government. They had that in place, and they did extend it for a time. But look, the reality is oil prices are still at pretty high levels. They're around $85 to $86 a barrel, and we're still seeing a lot of pain at the petrol pump, and it's obviously a big component of the CPI index. And obviously Labor want to reduce inflation significantly, and they've got a big gamble in this budget of getting inflation into that target band of just under 3% by the end of this year. I think they're really gambling in this budget to try and get the Reserve Bank to cut interest rates ahead of a potential election. I think that's one of the cornerstones of this budget. But the excise relief for petrol, it obviously costs a lot. They're splashing $300 per person on every household. They know that can go to everyone. The petrol price relief obviously only goes to people that do use petrol. And there's a lot of people, I'd imagine, out there that are cutting back on expenses, because we hear stories of people that are doing it really tough across the country. So maybe they possibly considered putting more support to the petrol sector and cutting prices at the Bowser, but they realised maybe the $300 on electricity bills was more needed, or a better way to equally distribute money across every Australian.
Why didn't
they? Claire, I wrote on fuel excise ahead of the budget, which is something I'm very interested in, because obviously the intergenerational report last year, it's pretty obvious, more efficient cars, more people driving EVs means that the fuel excise is diminishing. Tobacco as well, but fuel is a problem. Now, what do we use the fuel excise revenue for? Road transport infrastructure. the state governments felt so desperate. Morrison government didn't want to do anything about it, and there was a High Court ruling last year that said, and Mark Dreyfus joined the plaintiffs in this, which said it's up to the Commonwealth to introduce road user charges for people that use roads. So that's electric vehicle drivers. But of course, Labor have their targets on EVs, and this is a constant theme. They've got to retrofit for their targets. So, it's a big issue because road transport funding is going to get more and more pressure, and more people will be in EVs. So, it's one to watch in coming years.
Just speaking of EVs, this is not quite on the federal budget, but how close are we? Tesla has just dramatically cut its EV charging station infrastructure in the United States. Its future planning for that. Are we any closer to Jim Chalmers' dream of an EV nation?
Well, I mean, I tend to look around the world all the time, interested in what's happening in the world, and one of the recent developments is that Biden has imposed a 100% tariff on Chinese EVs. There's actually an incipient trade war. Maybe it's not even incipient, I think. So because the Chinese have become so good at EV production, they're now flooding America and they're flooding Europe and the traditional car makers, and that's in the context of stalling demand for EVs. So the early adopters have taken them up, and then people are saying, I don't know about that. I mean, I think it's interesting in Australia because, I can see a future where, because we're a very urbanised place, and an EV for scooting around Melbourne and Sydney, fine, because you get the regenerative braking and the like. And people who live out in the out in the regional areas, rural and regional areas, they'll have their Ford Hilux and the like. So we'll kind of have this bifurcated market. But, that's quite an issue for which Geoff is raising. I mean, you need to have some sort of neutral road user charging. Otherwise, you can't just rely on the regional Toyota Hiluxes to be paying for all the roads.
So this goes to the heart of the budget, though, and the philosophy behind the budget. The fact that we can have a future made in Australia, which is all about the renewable energy and the energy transition. But if you think about it from a philosophy point of view, go back to John Button. When he was the industry minister, it was about opening up our economy, doing the things that we do well, and basically taking cheaper products from around the world. So this is what created 40 years pretty much without a recession, one of the longest periods of time for any developed Western nation. The fact that inflation during that time came down because we were buying a lot of cheaper Chinese goods, manufactured goods, that we could not compete to make here. Now we're getting back into the business of making things and seeing the government hand out, sort of $1 billion to a company to try and make solar panels here to compete with China. Well, we're nuts doing that. That's not what we are going to be the best in the world at. Now, we might be the best in the world at making some critical minerals. I grant that point. Because we have the resources here, and if we've got the energy, then do it. But we've got to work out exactly, if we're going to try and pick winners, we've got to pick the right ones. And we can't pick the ones where we don't have a strategic advantage. And, the problem with trying to pick winners as government is you just sometimes wonder is where the favours are done along the way as well.
On Thursday night, Geoff, we'll see the Coalition's budget in reply speech at about 7:30 p.m. What are you expecting? And I'm interested in the panel's view about what they want from Peter Dutton. It would seem, and I'm interested in your view, Geoff, that Peter Dutton's slightly wedged here, isn't he? If he comes out as Mr. Austerity, Mr. Grim Reaper in this budget in reply, has Jim Chalmers wedged him?
Oh, no, not on this occasion. And you've got to remember that the back end of last year, the government were in a lot of distress. They did the stage 3 tax revamp in January to try and reset. They didn't really get a pickup from there, and subsequently there's been a lot of issues around national security and other things that has seen issues like crime skyrocket, behind cost of living as a top concern. So Peter Dutton, in his third budget reply tomorrow night, will talk a lot about migration levels. He believes that the numbers in the budget don't match with the rhetoric from Claire O'Neill, Jim Chalmers and Anthony Albanese. And he's going to tie it directly with the housing shortage crisis. So he's going to outline what he would do around migration and contrast it to what Labor isn't quite doing in terms of getting to where their rhetoric is. He's also obviously going to talk to cost of living, respond to this very big spending budget with lots of interesting policies in there. But he will also come back to community safety. As a former Queensland policeman, he will talk about a better national approach and a better coordination around policies with states and agencies. So he's going to talk about migration and housing. They're the key pillars from an economic perspective. And he's going to talk about public safety off the back of some pretty horrific stabbing incidents around the country. So they're the key themes for the budget reply.
What's your view, Ed? Should this be Peter Dutton's moment to talk about fiscal discipline and tightening the purse strings, or is it better for him politically to talk about those other things that he clearly wants to talk about?
Look, there wasn't a lot in the budget on youth crime in particular, so I think it is a good move for him to go pretty hard on that. But obviously, reining in the spending is the theme that Angus Taylor has been hammering in every interview over the past 24 hours, and I think he's going to really want to go hard on that front as well. Talk about the spending, talk about the deficits over the next 4 or 5 years, and talk about ways that they feel like they'll be able to lead Australia better in the lead up to this next election. I think he's also going to potentially say this is a pre-election budget and go into detail onto why he thinks Labor is trying to set this up as a pre-election budget. So that's my view on Dutton tomorrow night.
What's your view, Judith? Is this a moment for the opposition leader to say that $300 off your energy bill is a bad idea?
No, I don't think so, and I agree with Geoff. I think housing is really an Achilles heel for this government, and the link then with the huge migration numbers that have come in over the past couple of years in particular.
And we have a question from the audience. What is in the budget for people still trying to purchase a first property?
Well, you know, the thing that I found most alarming, because they now have multiple different programs and this and that and equity sharing and all sorts of things, but there's a tremendous emphasis on, well, what I used to call public housing and social housing and government housing, whereas I think, you know, the trouble is that a lot of ordinary folk are really seeking to kind of, you know, do it on their own, have their own house. You know, they might like a bit of help, but they want it to be an affordable option, and that, I think, is the frustration. And there wasn't much in the budget about that. I mean, housing is another classic thing. You know, we're going to give more money to the state governments and they're going to build more social housing. Well, you know, they haven't. Because there are so many impediments to that. You know, you've got sort of CFMEU in charge of anything that's more than 3 stories. The costs of materials, the costs of labour gone up. Approval's very slow. It really is agonising. And at the same time, it's so difficult for people. I mean, people are spending, you know, 50%, 60% of their gross income on having a roof over their head. That does not make for a happy electorate.
And there's an issue here as well, and that is that if you want to build the 1.2 million homes, that is the Albanese policy, you need more migrants. Because the one thing that we have in Australia is a lack of migrants to build, right? Now, even though the government might go out there and provide, and to their credit, you know, the places in TAFE, the free places in TAFE, big tick for that. But where are the people? The unemployment rate's just 3.8%. There are no people coming out, no unemployed people who you can upskill. So you've got to pinch them from somewhere else. And one of the reasons why you can't build the houses at the moment is, guess what? The state governments and the federal government have built all this infrastructure, and so taken all the engineers and taken all the tradies away. So they're basically competing
on really high pay. On really high pay too.
On really high pay. So then you come back to the migration situation and you say, well, okay, but to take pressure off the budget and to take pressure off inflation, we're going to cut the immigration rate. And so there's going to be companies screaming out and small businesses around this country going, don't do that. That's the worst thing you could do for us. Because then you even go where they've said, well, we're going to even cap the number of students coming to Australia, one of our biggest export industries, unless the institution, the university, builds the housing to put those people in. And
that's not going to happen, is it?
Well, no,
not
because
quickly.
you need more migrants to come in to build
But not quickly, anyway.
So it's a circular argument, this thing. And so this is where, strategically, the migration policy of the government, which they've been at pains to point out, and it's been, at least a plan and a strategy. But this is where Peter Dutton can come through and basically say, we can change this to make certain that the people coming to this country are exactly the people that we want for the future. Younger people, highly skilled people, people who will be long-term taxpayers here. That would be the nirvana of a migration policy.
But to attract them, you want to have cheap, good quality housing, and we don't have that at the moment. So it makes it very difficult for them as well.
Good point. Geoff?
Ross, just to go to your point there, and this is where there's so many contradictions. There was an announcement last week that they're looking to streamline 1,900 tradies from places like comparable countries like UK, Canada. So it's a complete acknowledgement. We do not have them. We didn't have wage subsidies in place. They're trying to get that back on board. But they're saying we're going to cut migration, but they're also announcing we're going to streamline 1,900 tradies from overseas. So it continues this contradictory sort of sell of this budget.
Speaking of contradiction, Geoff, I'm interested in your take on the labour values element of that migration discussion. The government was expecting from the December update that net overseas migration would be 375,000. The budget revealed it's 395,000 in the year. They need to get that down, or they want to get that down to 260,000. Surely, though, a lot of Labor voters would expect Labor to be supportive of a big Australia, particularly migrant voters, wouldn't they?
I think that they're really confused, and I think they're really struggling to work out what to do. And we've seen them try and announce some sort of crackdowns around international students, telling universities you've got to build more housing for international students. So you see this sort of like they're pulling every lever, which is, hey, unis, can you help build some housing to try and help us get to the target? They've changed the foreign investment rules because there's a Canadian super fund that they've identified to do build to rent. So he's changing the rules to try and get that Canadian super funding quicker. So there's lots of retrofitting that's going on with policy at the moment.
There are lots of tents on university campuses now, but the government's trying to get rid of them.
But on the point about what is the attitude of migrants to immigration, the interesting thing is there's a bit of a pull the ladder up kind of attitude. So it's very clear if we look at the surveys of the population, or the electorate at large, they want the migrant intake to be cut. And that is also true of the migrant groups, although they tend to be in favour of a family reunion component. But it's really the overwhelming problems of, and it's not just housing, it's about congestion, it's about pressures on schools, health, other facilities. So it's about the rate of change as opposed to migration itself. So you really can't go from a negative figure to, what was it, the last figure was 580,000 coming in over a course of a year. That's too big a delta.
Ed, one of the big issues in the economy that people are talking about day to day in businesses from the employee side and the employer side is work from home. How our economy has so radically changed since COVID. I mean, on my reading, and I may very well have missed it in the 45 budget books that we got handed yesterday, is there anything in the budget about that huge shift that's happened to all of our lives?
Look, I couldn't see anything in there, Claire, in this budget on working from home and things like that. We know, though, in the last sort of year or so, a lot of companies are now trying to encourage their employees to come back to the office at least 2 to 3 days a week. That's another way to try and boost productivity and boost revenue in the CBD areas for businesses that we know are doing it tough. But it's just not something that I saw in the budget at all. But
that's also going to add to those problems that you were talking about, congestion, the difficulty of day-to-day life. Is that why the government is not addressing that as something that business is really concerned about?
Well, they've got a very permissive attitude in respect of their own workers, the Commonwealth Government. So basically there's a presumption that people can work from home unless the supervisor can demonstrate otherwise. But, I mean, it's kind of an under-researched area. What is the impact of working from home on productivity? It's fine for jobs that are basically staying the same and routine. The real problem is where teamwork, skill development, promotions, where that matters. I mean, I think of my own very long career as an economist. I could never have achieved what I achieved if I've been staying at home. I mean, it's just, you know, you just need to build up the context, you build up the networks, you need to go to meetings, you need to work in teams.
Is that a concern particularly for women, Judith, who have embraced working from home?
Yes, there's been some very interesting articles in the work from in the Wall Street Journal about this, that in fact it may be quite negative for women because, you know, the view is, oh, well, you're working from home, but could you do the laundry, pick up the kids and cook dinner? And, you know, the hero of the house, the man, he's, you know, he's out there working. So, yeah, you've got to, I think, watch for some of those things, yeah.
There's a women's budget in the budget, a special budget book. In this budget, it did include some measures about $1 billion, in fact, outlaid for the emergency funding for women who are in desperate situations. Of course, that could be anyone who's in a desperate situation to get some cash to get out safely straight away. But Ross, what did you see in the budget apart from that for this issue that that Australians are so concerned about, women's safety?
So not terribly much, but you know, superannuation on sort of parental leave is another one that was being announced, but was there as well. So that was another small one there. So this is about trying to give more women financial security. But the one thing that keeps coming back to me, and it's as a society now, but it's actually right deep in this budget, and that is the fact that all Australians, the laid-back country, we like to think of ourselves being pretty relaxed, there is pressure on at every point. Now, there is pressure on families, on women. There are more women working now than whatever there has been before. But families need two incomes in our capital cities to support the mortgages, the big mortgages that they take on. So there's a pressure of physically getting around. That becomes an issue, which is a government issue about infrastructure and the way in which our transport systems work. There is pressure on the resources and the money, on the health system. There's just pressure that's building. And the funny thing is there's pressure on the economy. You could see this in the budget with the debts that are rising. So the real issue about this is we haven't had a recession for 40 years. I mean, there was the COVID recession, I get that, but that was basically spent out with more than $300 billion. But the reality is there is just this pressure building in our society and in our economy. You just get the sense of it from this budget. And at some point, you know, unless there are strong decisions made, something's going to give. And you don't just wonder when. That's an interesting thing.
And Ross, the other pressure is the unemployment rate. We're going to get the numbers for April tomorrow where we're seeing it at 3.9% probably. But in the Treasury forecast, they are expecting unemployment to go up to 4.5% by June of next year.
That's 100,000 people out of work.
That's a lot of jobs.
Right? So there's more pressure that's coming. So the thing is, at the moment, with cost of living, the crisis that's there, people can cope while they've got a job. But when people don't have a job, that's when the real crisis happens, because you've got nowhere to turn. And that can have a knock-on effect on consumer spending, on the housing market, on so many other areas. So you don't want the economy to give, but there is pressure building, there's no doubt.
Before we came on air, Ed, you were talking about the contingency fund.
Yes.
We've got a question about it. Tell us first, what is it, and
So
what have we learned about it?
Go to page 223, budget paper 1, but it comes up with the contingency reserve, and if you add it up over the next 4 years, it totals just under $61 billion. But basically, what it is, it's policies the government have announced and haven't properly costed yet in time for the budget. It's also policies that are confidential, could be defence spending or something along those lines that they don't want the public to know. It's also policies that they've announced privately and have costed already, but haven't publicly announced as well. So that's in there, as well as some childcare wages, which are going to be increasing over the coming years, and they have them in the contingency reserve funding too. But there's also space in this contingency reserve for little election sweeteners and additional hollow logs in the budget that the government can use and allocate.
Slush fund, in other words.
Well, the biggest hollow log is their commodity price forecast,
of course.
right?
Yeah.
So that's the biggest one that they've got. So because they always undercook the commodity prices, and you look at them, they've got iron ore down at $60, they've got oil down at $60. You know, they're all much higher now. So always there's this extra money that they've got that can be coming through into the future as well.
Geoff, what's your view about whether this is actually a pre-election budget, and are we going to have an election this year?
Look, the budget was prepared with an election in mind, but you then have to think about what the economic conditions will look like towards the end of the year. We obviously have 3 elections coming up, NT, ACT, and a big one in Queensland in October. So you're realistically, and there are people in the coalition that have thought, okay, we have to be ready to go. and from both sides, they're talking about if they went early, you'd probably see an early December election. I spoke to some senior Labor people last night, and I think it's still odds on that we'll probably see a March budget. They don't have to do a March budget, but we'll probably see a March budget, and they will go full term. I mean, if they're under pressure, if there's no movement on interest rates, or if interest rates go up, or if there's anything that goes wrong around inflation and such, I think you'll see a Prime Minister that wants to stay in the chair full term. And, the only chance of an early election is if they decide that it's their best bet or prospect to hold government, even minority government, and relying on support of the Greens and independents. If they can get there, it will be a ruthless decision in terms of how do they hold on to government. And they've got this budget in line to be able to support an early election.
They've only got a one-seat majority, Ross. You've seen a lot of budgets and a lot of elections. Is the spending in this budget enough to woo enough voters to make it a risk worth taking?
Probably not, but it's the reason why Anthony Albanese has spent so much time in Western Australia and in Queensland with big spending policies in both those states alongside the state governments, trying to A, get those states across the line, but then B, trying to make certain that he's shoring up his own seats in those places. That's where the next election, I sense, is won or lost. And so really this is the reason why a lot of that spending that's in this budget is directed to those states, where those states right now with massive surpluses are booming. New South Wales and Victoria are really withering on the vine in many ways.
Particularly Victoria.
Particularly Victoria with its massive debt which is building up and infrastructure projects which it's had to cancel. So it is a situation where those resource-rich states right now are in a fundamentally different position than what the traditional manufacturing heavy states are.
And so what's left? If there is a budget in March, $60 billion worth of lollies, is that what we'd be expecting?
Well, no, actually... So if you look at consumer sentiment surveys, and we've got those data for a very, very long time, people are very gloomy at the moment. You know, they actually were reasonably happy during COVID, I think partly because the government was sort of underpinning people's financial positions. You know, they're as gloomy as they were back in 1990-91 when we had that very deep recession. And the thing that the data also tell you is that what would lift the gloominess is a cut to their mortgage rates.
Yep, I think the least confident people in the country are those that are paying off a mortgage, then followed by renters, and then followed by homeowners as the most confident out of the three cohorts. But it is people with a mortgage that are very worried.
But compared
about
with the
their
cost of living
payments.
measures, the mortgage payments are just so much are more important than any sort of ephemeral cost of living measure.
We've run out of time. Thank you very much for joining us. I'd like to thank the panel, Ed Boyd, Judith Sloan, Ross Greenwood and Geoff Chambers, and we'll see you next time. Thank you very much.